How do you fund your company with revenue? Or what does it mean to fund your company with revenue from operations? Well, to begin with, let's begin by breaking down the strategic objectives of two distinct types of business venture: the startup business and the small business or the mature business or the family business. Okay. The startup venture is focused on growth. And to do so, it needs to burn a lot of capital. It needs to spend a lot of money to acquire the market presence, the market share, the number of customer, clients, and users that will create long-term value. In order to do so, it has to spend lots of money, and usually it needs to spend outside money. That is money from loans, money from investors. The operational revenue from the business is not going to be enough to achieve the growth potential. And the reason this is a viable model is because the potential for growth of these types of businesses and the potential for future return from that long-term value is so high that it is well worth investing and burning up money from outside investors and loans to achieve that growth, because the future benefits of that growth is far outweighs the cost of that money or resources at this point in time. So with that being said, you're generally not going to be able to use company revenue to fully fund your business. Obviously, revenue from operations will be a part of your budget, but you'll make up the difference with other sources: personal investment, friends and family investment, third-party non-related investors like venture capitalists, or loans to the business. And once again, most of that's spent on ramping up operations, but the majority, the lion's share, is spent on marketing and spreading the word and acquiring new customers, that type of thing. So there you go. So what we're going to focus on then, if you're going to fund your business with operational revenue, then you're primarily a small business that may grow to a mid-size or even a large business. But the difference between the start of it is it's more gradual growth. The objective is to achieve profitability as soon as possible. This is commonly known as turning the corner. And the sooner you can achieve profitability, the sooner you have excess money above operational costs to pay back to the owners. Now, until you can reach that break-even point, because normally it takes businesses sometimes a couple of years to achieve profitability, to turn that corner. So in the meantime, you're living off of personal savings, personal investment, loans, things of that nature. But once you get there, then the business is self-sustaining and it returns a profit back to the owners of the business. Okay, so that's your overall objective there. Now, say you're very lucky and you achieve profitability very early. Well, in that situation, as long as you are not foregoing opportunity for growth and greater long-term value, right, that you're turning down greater value through long-term growth by pulling money out, as long as you're not doing that, you're maximizing what you can do based upon your capacity and everything like that, then yes, funding the business with operational revenue is probably the best way to go. There are numerous advantages to it. Number one, if you don't obtain outside investors, then you retain 100% ownership and control of your business. That's a wonderful thing for somebody who wants to be in charge of the business and doesn't want to push the decision-making and control off on the others who have purchased an interest by investing in the business. And you don't have obligations like loan payments and things like that come due. Because most businesses, if you can't afford things like to buy an office building, and most startup businesses or small businesses can't, you rent space and things like that. So keeping overhead low is very important. You already have your rent, you already have your insurance, you already have so many other expenses. To have a loan payment that you have to meet on top of it can weigh the business down a lot. So not having the loan payment, retaining all operational control, it allows you nimbleness and the ability to pivot and take advantage of opportunities when necessary. So this is what it means to fund your business or your company with operational revenue.